than AI at financial modelling. People focusing a lot on data with AI, but not necessarily on financial modelling quite yet, probably because it's much harder. And that's the issue, is that it's not being taught by people in that level, it's being potentially taught by people who are not very good.
That's why we focus at Fifth Dimension on the right source of truth, right, to feed into a machine learning universe for your particular business.
So a lot of people that don't do this with their financial models is using it as a negotiation tool. I think Excel will probably be around. It's just a question of how people use it. But then I was having a conversation with someone earlier about whether AI can get rid of the junior analyst role. And potentially it can, but then how are people going to learn how to be senior analysts if they haven't had a chance to be a junior analyst? With AI and tech, they can become faster, but ultimately conversations and decisions need to be made by people.
Decision makers never go out of fashion. People have access to better and more reliable insights with which they make decisions. So I hope it means that we just do more people things rather than fewer people things.
I had really bad mental health issues, and it's something that I talk about a lot, particularly in the real estate industry. Every time I put a post on LinkedIn talking about my mental health, I get a lot of messages, private messages from people saying, thank you so much for sharing. We need to talk about it more.
Hello, welcome to another episode of Bricks, Bytes, and Bold Moves, the future of real estate. I am Dr. Kate Jarvis, the CEO of Fifth Dimension, and I am here today with Lucy Gordon, who is the CEO and founder of Excel in Property. And you've done a lot of different things. You're a chartered surveyor. You have a deep expertise in financial models that I find mildly terrifying and really am excited to learn more about. And I think in some ways I would view you today as an educator. You're teaching people about how to do things better to drive strategic, why is that word hard to say? Yeah. Strategic growth within businesses, and particularly in the types of real estate businesses that I also often work with. So you have been dealing with variations of the same challenges I'm up against in terms of change management, getting people to think differently and perhaps work a bit differently than what they're used to. And I'm interested to hear more on how you got so obsessed with Excel, of all things. But thank you for being here and welcome to the show.
Well, first of all, thank you very much for having me. It's a delight to be here.
Fantastic. So where do we start? I mean, were you always someone who was like, maths? I love math.
Yes, I was very mathsy. I originally wanted to go into architecture because I really love buildings. And so I did maths and physics and art at A-level. Always loved maths. And then didn't become an architect, obviously, because actually I'm not very good at drawing. It's a bit of a problem.
AI can help you with that these days.
Now it can, but couldn't have done back then. And then I started working for a fund and sort of realised that I was actually much better at maths and at Excel and analysis than I had ever anticipated. So that's how it sort of started back in the day.
So what was that transition like? So you were trained, and as we all are, we study things at university, and then you're sort of like, well, I need to get a job. And the job that I thought I was being trained for doesn't meet the expectations I had when I was studying that at university. And I know you've been exposed to, different types of investment management. How did you end up in the particular, let's say, niche or vertical within real estate, where you really focused on what you're focused on today?
So I did an economics degree, actually, initially, but I wasn't very good at it. Not very good at theory, very good at practical stuff, but not very good at theory. So I really struggled with that. And then I did a real estate master's. So that's how I sort of got back into the real estate world, and then was hoping to go into development and sort of meet somewhere in the middle between my architectural aspirations and knowing that I was actually more suited to the analytical side of things. And when I was applying for jobs, I then got work experience with a fund called Clearbell, or back in the day it was called Mount Grange, and work experience turned into a full-time job. And I stayed there for a long time because when I first started that work experience, I was given a couple of Excel tasks to do, and I was really, really good at it. And so that's how I ended up being an analyst. And then I was very lucky at Clearbell, quite a small company, and I ended up getting exposed to lots of different things while I was there because of the fact that it was a small company and I could try out debt and acquisitions and all sorts of things within this small team.
Got it. So your early days as an analyst, what was that job really like? What was your day-to-day workflows, sets of tasks, and what about that really got you excited?
Well, people are going to be like, she's such an Excel nerd. I love figuring out how things work in Excel, which is why I like maths as well, because I like the fact that there's a definite answer and you get to an answer, as opposed to when you're trying to do something more creatively, it's difficult to find an exact answer, whereas with Excel you can get an answer. And so the part of Excel that I love, and being an analyst that I love, is building models and working out how to get something to work. When it comes to the scenario analysis, that didn't and doesn't really float my boat. So I quickly tried to shift that work off onto the more junior people and focus myself on the sort of more unique projects that we were looking at, that then involved actually building and developing the models out to become more complex, to be able to look at things that weren't pure, offices or mainstream assets, to then look at things like hotels. And we bought a residential trading platform and things like that, and I built all the models for those because I really liked trying to find a way to get it to work.
Fascinating. Yeah, I think as a long-term data scientist in and around machine learning, have always thought that, determinism is boring. So now I can see there's another side to this. There are certain things that I think should always be determined algorithmically, and usually it's the combination of weird probabilities with some things that you're quite certain about, and you can combine those two together to make beautiful magic happen. But how did you advance your skills in Excel? A lot of the people I talk to who are excited about building models are largely self-taught. Did you spend a lot of time on the internet?
Absolutely. And this is what I say to lots of people. Like, I've always enjoyed Excel, and so I've taught myself Excel. Whereas if you put me in front of a PowerPoint, I have no idea, and simplest thing possible, and it doesn't interest me. Whereas I know there are plenty of people who just love PowerPoint, and so they'll do the same and they'll teach themselves how to do that thing. So yeah, a lot of Googling in the early days. I was also very lucky that I worked in a team where there were a lot of analysts in there, more analysts than there were asset managers. So I had people who were really, really good and more senior to me to help teach me, but also a lot of Google and a lot of how can I get this thing to work, and going down many, many rabbit holes of forums trying to find solutions. And that's one of the things now, to get on the topic of AI, that people can benefit from not having to do that Google trawling, because they've got a tool that can do that for them when it comes to trying to make better formulas and learn VBA and things like that. That, for me, that was all me just Googling it. And now I know that I can just put a formula into ChatGPT and say, is this the most efficient formula for this? And it will tell me yes or no. So people are ahead of the game now. It took me many, many years to learn those things, but you can do that in seconds now.
Yeah, I mean, I too had to walk uphill in the snow both ways to learn how to do natural language processing. And not only is most of that stuff relatively useless outside the outskirts of technology anymore, a lot of the stuff I would have spent 6 months trying to build in graduate school, to date myself a bit here, now takes minutes.
Yeah, and that's the thing. Now people can take that skill and learn. Like, because I always say to people, if you want to improve in your Excel skills, and it's the same with every skill, take what you did yesterday and try and make it better today. And so spend just a couple of minutes, and now with AI, you definitely can spend a couple of minutes. You just say, how can I make this better? And it will tell you, as opposed to having to spend an hour learning how to make it better. And that is how we all improve. It's just little incremental steps each day to get us better.
That makes it sound a lot less intimidating, which I appreciate. And I can tell that you talk about this a lot in a way to make it non-threatening to people for whom, a basic Excel formula is already a bit...
Yeah, because I spend a lot of time, I'm really passionate about teaching. I was very lucky in the fact that I had this team of analysts who were teaching me, and it was all very in-depth. And people don't get that now. And actually, I was talking to some graduates or some university students recently who told me that they still had their first time of being taught Excel properly, in inverted commas, was at university, despite the fact that it's a core skill. Like, pretty much every single job you get into when you're grown up, you will end up probably using Excel at some point. Yeah. And therefore, you should be being taught it earlier than university.
Mine was live on the job for sure.
Yeah. And so a lot of people ask me that question a lot, is how can I get better in Excel?
Interesting. So to zoom out for a second, let's take an example of a complex asset like a hotel. Why is it so important to get the modeling right? Walk me through how you build that model, what the consequences are if it's done really well versus if it's done not so well.
I think lots of people talk about returns being a big thing, but actually for me the biggest thing is cash, managing your cash. If you don't have an accurate forecast, then you're going to run out of money, probably, potentially, who knows, and then you're going to be in a very difficult position. And
I'm hearing a bit of the developer mindset and the planning mindset in there as well.
Yeah, because I think that's the biggest thing is people think, they don't think about the nuances that come with stuff like that, because they just think, okay, well, it's £10 million, I need £10 million, and they don't think about the fact that there are timing issues, and if one payment is, if one receipt doesn't come in on time, you're going to have a shortfall, so how do you manage that? But then equally, I think another thing to be really clear about with financial models is it's not supposed to be to the penny accurate forecast. It's supposed to be a best guess and a best estimate of where you're going to be. But yeah, for me, it's all about trying to predict your cash flow as best as you can, so that you know that you've got enough money, and then also using it. And I think there's a lot of people that don't do this with their financial models, is using it as a negotiation tool. When I was at Clearbell and I took over the debt, I would sit there with a term sheet and I would play around with all of the different inputs. And most people think, oh, we just want to negotiate LTV or margin. But actually, what about amortization? What about entry fees and exit fees? Like when you start to play around with all of these things, you'll find the one that makes the biggest difference. And then you can sort of know that that's the one that you need to push hardest on in your negotiation, and leave something else on the table, sort of a nice to have as opposed to a definite have to have. And I think lots of people aren't doing that. They aren't using their models to the best of their ability. They're just sort of using them to work out whether they can pay that price, and then not using it beyond that.
Yeah, I've definitely been trying to make that transition myself, to be honest, now as a CEO and business runner. And you didn't say this word, but it's the word my finance director repeats to me all the time when I'm looking at our business model, which is materiality, right? Mm-hmm. And so there are things that I walk into my business model with as assumptions, like, what do I need to pay attention to? Customer acquisition costs. What do I need to think about in terms of cash flow? Are we asking our customers to pay us upfront for 12 months or invoice us quarterly? Those things I know are material because they're, fundamental concepts that are talked about as being important to running my business from a ongoing cash flow perspective and from a fundraising perspective. But there are a lot of things that are quite material that surprise me. And there are a lot of things that are immaterial that intuitively I'm like, that can't be true. So like one example of that is, we run a business that is partially based on paying people commission for sales that they make. Of course, common model. What does that mean? At scale, you can be closing really large contracts. It might not substantially increase my runway to substantially increase my sales, depending on what those commissions are. And that might not have been something I would have paid attention to until I got in a deeper understanding mode of questioning what might have a material impact on my scenario planning.
Yeah, and so you have to do the maths, obviously, to work out what is the right number there, but you're also thinking about the bigger picture, and that's the thing with being a business owner, isn't it? Is you're not just thinking, how can I purely make profit? It's how can I also get more customers or get something else that's going to make a difference in the future rather than necessarily just right now. And that's, it's really important that you are considering the bigger pictures, and that's why I suggest, you don't sit there and get stuck in a spreadsheet and just stay there. You do have to think about how all of these decisions come together, but use that spreadsheet to help you plan those decisions and sort of decide which is the best way to go.
So you shouldn't only beat people up with Excel models when your cash flow falls short of projections and stuff like that also.
Yes, exactly.
Yes, I think they have been used as tools for evil, and that's part of why some of these models do get a bad rap, right? Is when do you talk most about business projections when you failed to meet them?
Yes, and there are some shocking models and projections out there, and that's the issue, is that people sort of lose trust as well because they think there are these mistakes in it or whatever, and therefore I can't rely on it as a way to run my business. But otherwise, what are you relying on? Just finger in the air sort of decisions.
Yeah, exactly. People are still going to make errors, and there are still going to be unpredictable scenarios or largely unpredictable ones. But that doesn't mean that the science of making a prediction in the first place is invalid. It's really interesting. I was reading, it might have been BizNow. There was some article recently in which people were clutching their pearls about running a very large balance sheet as an asset management business off of a single Excel model. And I was like, I'm sorry, were you born yesterday? That's almost every business that I've met in real estate. Like, it's a yes, and doesn't everyone do this? And in fact, like, what even is the problem with doing that, except that we know that people are making so many manual errors. They're perhaps not thinking more strategically. They're only taking a myopic view of what's involved in building that model or maintaining that model. Perhaps they're overriding each other in its final version 18, whatever. And there's some fundamental issues there. But, like, you can run a business off Excel, can't you?
Yeah, absolutely. And I think, when I'm teaching people how to build models and when I'm building models myself, I always make sure I follow a sort of, it's obviously not totally prescriptive routine, but sort of making sure that I'm planning what goes into it and then getting it audited while it's being built and once it's built. And that's what a lot of people don't do. They just think, I'm the controller of this spreadsheet, so I'm not going to let anyone see anything other than a little table at the end of it. And then who knows what horrible things are hiding in there because you haven't got it checked and had other people reviewing it and sort of all seeing all of the inputs and calculations that go into that final output that people want to see in their investment committees or whatever it is.
So from when you were first an analyst yourself to now where we stand today, what are some differences that you've observed in the ways that people view financial modeling as part of the real estate industry?
Well, the biggest thing is that the agent's side of real estate is catching up with the investor side. Because at Clearbell, we had incredible models. They were so detailed, sort of, investment bank style models. And then an agent would send you a spreadsheet and it would be 5 lines and that would be it, and they would miss out a whole bunch of things. And this is where that sort of cash flow element comes in, is if you forget about tax and VAT and all of these other stuff, then actually your returns don't look as good as you think they do on initial glance, and you run out of money. And so the agents are realizing now that they have to slightly up their game to be able to present more realistic numbers to investors when they're then presenting opportunities. And that is what has led to now people like the RICS and valuers being encouraged to use DCFs where appropriate, because that's how the investors are looking at things, and they want to see the same level of transparency and detail in their valuations that they're putting into their decision making.
Yeah, that makes a lot of sense. I think otherwise the information or data loop is incomplete at best, and it's hard to make a decision off of a subset of information or information that you don't trust. Do you think we're headed towards a world in which more standards are imposed sort of throughout the real estate value chain about how people are modeling?
That would be lovely. But I don't think so. I think, every time I open a spreadsheet by someone else, they're all so different. And I don't know, it would be lovely if there was a more standardized way of doing things so that it was easier to be able to spot errors and understand things. But at the moment, there's not. And I suppose a lot of that probably is that people aren't really being taught Excel and aren't really being taught how to build models. And obviously we have sort of pre-built tools that people use that allows them to have that standardization, but they don't work for every single scenario. And you can't see the calculations in the back, so you don't know how it's all working and how it's being calculated.
Yeah, hopefully, as you said, AI can help both with debugging and QAing existing models and generating models, perhaps not that are exactly standardized, but have some standardized elements to them that you can make bespoke to a particular situation. But I'm wondering about this flip from, you doing a lot of this yourself to you really becoming an educator in the space and, setting trends for how people are
Thank you.
working in financial models. And you said you had great teachers yourself, and it sounds like that was inspirational for you. But what else motivated you to start your own business?
So starting my own business, is very unrelated to me becoming a teacher. I had really bad mental health issues, and it's something that I talk about a lot, and I'm very passionate about sharing, because particularly in the real estate industry, there, like, every time I put a post on LinkedIn talking about my mental health, I get a lot of messages, private messages from people saying, thank you so much for sharing. I've experienced this, or I've experienced something similar, which is great that I'm not the only one out there, but also that we need to talk about it more. So I left my old job because I was just having such bad anxiety that I couldn't keep commuting into central London. It was too much for me, and I was getting off the tube, arriving in the office feeling so anxious and stressed, and I just couldn't keep doing it. So that's why I ended up leaving, and not really intending to start my own thing, but just sort of thinking I need to clear my head and work out where I go from here. And then one thing led to another, a couple of freelance gigs, and 5.5 years later, still doing it.
And it sounds like you're still enjoying doing it, which is important.
Yes, I do. I like working for myself. I like having the freedom that you don't have as an employee, but it's very stressful, as you all know from running your own business and having customers and staff and all sorts of things. It can be a lot.
Yeah, I was going to ask. I mean, when I think about things that are reducing stress in my life, I don't tend to go to, I'm the CEO and co-founder of a venture-backed business as being top of the list. And yeah, I'm interested in what about your prior job situation, life scenario, is it just you had the personal self-awareness to say, whatever the reasons are, I can't keep doing this? How did you think about how you ended up going and having that commute and arriving at work every day in a terrible place? What got you from when you graduated university to there?
It's hard to say. There was one particularly triggering moment that sort of started my anxiety and depression, and it was a particular project that we were working on at Clearbell that just got too much, and that's what started the whole sort of flowing of emotions. And then I went through various amounts of therapy to get through that, and went back to work. But ultimately, I couldn't just keep going in, keep being triggered by the same thing. And so that's why I left. And obviously with running your own business, you still have a lot of those triggers, because a lot of them aren't just the commute. There are other elements of stress and anxiety and depression that come along as well. But it means, by working for myself, it means that if I am feeling bad, I can take the time to look after myself, rather than feeling like you have to keep going into work and you have to keep pushing through when you're an employee.
Yeah, I think that is right. And even with how I am busier today than I've ever been before, I also have the freedom and the ability to clear my diary for a day or a half a day whenever I need to, which I think is absolutely critical to my current functioning. And I haven't said this in this type of forum before, but I have complex PTSD comorbid with depression and anxiety. And luckily or unluckily, a lot of that is from the first 20, 25 years of my life. And so at this point, I would say I'm quite deep into managing those quite proactively. I also am lucky to have a deep bench. I've always had a number of therapists. I have an executive coach, and that's all extremely helpful to me. But I find running a business is, in addition to parenting, so those two things together make me confront more things about myself in, a compressed timeline that I could have imagined possible before.
Yeah, and I think that there's thank you very much for sharing. I think there's a lot of people who don't share these things, and I definitely was guilty of sort of suppressing all of the thoughts that I was having and emotional sort of everything. And now I'm much happier, and obviously I still go through emotional cycles, but I'm much happier now that I talk about it a lot, and my clients are a lot more understanding than my employer was, because of the fact that I am really vocal about it, that in a way that I couldn't be in that environment. Whereas now, because I'm sort of pioneering on my own, I can shout about my mental health issues, and therefore when I am feeling in a bad place, then I can just set my out of office and say, I'm out of here, guys, for the next 2 days. And everyone's really respectful of that, and it's something that I don't think I would get as an employee.
Yeah. I mean, hopefully you can help create a business culture and embed it in your values that makes it more possible. But I certainly felt that without doing that myself, it would be hard to continue to find other employers that would give me the type of autonomy I needed on any number of levels. And part of what I really love about running a business is like actually recognizing when I'm being triggered and seeing if it's useful or not. And so historically, one of the things I'm quite triggered by is feeling like I'm being gaslit. Comes from the way I grew up.
Yeah.
And, it's really interesting nowadays when I'm, deep in a sales cycle, for example, and someone will use a negotiating tactic on me that they'll pretend we've never talked about price. We've literally talked about it 3 times before. You're going to act like we've never had this conversation, for example. Take another example. I, of course, have raised a couple of investment rounds from venture capitalists and, continuing to do that. And oftentimes I'll get told that things are true about my business or about my market thesis from the outside. And I'm just kind of like, that's so interesting that you know precisely how my architecture works when you've never, seen under the hood of our code, for example. But you're making a set of assumptions, right? You're trying to quickly categorize my business and therefore make a set of inferences off the back of that about whether it's something that needs more capital, et cetera. I understand those things. But in those moments, I'm just like, why are you lying to me? Why is everyone trying to make me believe in a reality, right? Like that isn't the reality I deeply believe to be true. But it can be, I find, it's not always the case, but it can either be a superpower or kryptonite. Because I'm like, that's interesting. I'm having this really strong emotional reaction to this. Like, actually, is it because I think these investors are bad investors? Like, do I think that their view of the market I'm selling into, like they think real estate is so fundamentally backwards and doesn't have the appetite for an AI transformation? And so actually what I'm being triggered by is like, your worldview just doesn't match mine and you're trying to impose it on me. That's an interesting signal. I can do something with that. That means you're not the right investor for me. Now, is it unpleasant for me to have had to manage, right, like the peak of that emotional reaction in a professional environment? Yes. But I guess like I've come to a place also because, again, I'm just a data science nerd where I'm just like, oh, like maybe I can just make friends with like the myriad of thoughts and feelings I have in any professional situation and treat it like it's either noise or signal. Make the decision live.
Yeah. And you're reminding me that I love when something happens to me, because one of my triggers is sort of being outside my control. So I've turned off my notifications on my phone and things like that so that I don't get triggered at certain times of the day, because otherwise if someone sends me an email that says something that I wasn't expecting, that can send me into a spiral. But equally, when I get that email that I'm not expecting or notification, whatever it is, and I don't spiral, I think to myself, wow, that's really good. What happened there? Why has that not triggered me? And I can see and learn from that thing not triggering me and thinking, okay, that's really good. I've obviously got beyond this issue and I can now focus on, getting better from this next issue.
That's a really good point too. I think part of the reason that my co-founder and I get along so well is we started from a place of kind of deep challenge but mistrust. And so there was a lot of misinterpretation of the other person's behavior. He thought that I was an arrogant American being brought in to like tell him how to do business, which was in some senses true. And, I thought that he was this posh British guy for whom everything had always been easy. And so he was just going to tell me how technology is supposed to work, even though I had vastly more experience than he did. And, we all have these kind of stereotyped images of each other that, as we know, highly bias the way in which we receive information. And you can think about it as stereotype threat. You can think about it as any number of cognitive biases. But what I found is, as soon as both of us kind of got past that, we're now in this place where Johnny could say the most sort of cutting acerbic piece of feedback I could imagine. And I'm just like, oh, haha, yeah, you're right. That's true. That's obviously true about me. So to your point, I'm just like, oh, that's so interesting. In a different context, I would be like, oh, you're just saying that about me or about this idea because you've made assumptions about who I am, where I've come from, all this other stuff. But delivered by the right person in the right way when there's psychological safety, I'm like, oh, that's so interesting.
Yeah, and that's because you're now in a position of trust with him, and so you know that whatever he's saying, he's not saying it maliciously, he's saying it matter-of-factly. basically.
Yeah, exactly. And then I can just be purely curious rather than trying to infer what his motives are and then how that might change the way that I need to behave. So, yeah, I'm curious. We have ways in which we think about trying to further embrace neurodivergence and how it's embedded in our values. But when you think about building or growing a business, how do you think about making it easy for other people that you work with internally or externally to be their best selves?
It is so difficult because everyone is very different, and the thing that works for me, and equally the thing that triggers me, is not the same for everyone else. So it is difficult trying to find an environment that works for everyone. What I found works for me in the way that I run my business is having everyone else being freelancers means that they can be in control of their own time, because that's something that's really important to me, to know that I can take the time off when I need to. And so they have that same freedom and flexibility. So I'm growing a team purely of freelancers.
Interesting. And what are your aspirations for the business? How do you want it to continue to grow? Can you sustain it being only freelancers? Do you want to?
Well, I did have some employees and I found it very stressful, which is why I've had to wind back and just go freelancers for now. And yeah, there is absolutely potential to grow it more. I think one of the issues is that there are a lot of really bad analysts out there. And it's put a lot of mistrust in analysts, I think. And therefore, there are a lot of people who can't quite make decisions about whether they want to use our service or not. And that is one of the things that with the freelance and taking on people full time is, if I can't guarantee that there's going to be continuous work full time, then it's really hard to take people on full time and have that additional pressure. But as more people realize that advanced modeling is actually helpful, and when you get the right people who know what they're doing, then it is really good, then hopefully that will allow for growth. But also my big passion at the moment, and again, this is why I'm growing this freelance team, is my big passion is educating.
I'm wondering how you get people to kind of open up about their comfort level, realistic comfort level with modeling and the mistakes that they might be making as analysts and the potential impact of their mistakes. So if I'm to make an analogy to some of the work that we do with our existing clients, when their boss isn't in the room, the person whose job it is to own a valuation model will say there's at least a 20% error rate in this model. And if you're thinking about, the types of money that people are moving around as a result of that valuation model, that is legitimately horrifying, right? If their boss is in the room, they might, cut that by at least 10%. There's some standard deviation that's kind of viewed as more acceptable for manual error when you're doing different types of modeling that are relied upon for, making investment management decisions, for example. But one of the barriers or change management sort of challenges we run into in getting people onto adopting our technology is precisely look, we don't want to say computers are better at this than people are, but they are. It is factually correct, right? That for certain types of QA analysis, etc., you have to have QA the underlying data, which is a problem in and of itself. But can we please be realistic that if there are however many thousands, right, of rows and columns in that spreadsheet, a lot of them aren't going to be right.
Yes, and I have inherited models at Clearbell. I've been sent models from clients where within a very short period of time I have spotted some quite serious errors, and they just have no idea because no one's checking them. And I think one of the issues is that the analyst will be so nervous about saying that there's a mistake that they won't tell anyone, and they'll just hope no one notices for a long time potentially, or they'll just slowly phase the error out. Or they will have no idea that the error is there themselves because they've inherited these models from other people. So, yeah, I'm all about getting people to audit your models throughout the whole process. Whether you're building it, before you make any big decisions about buying and selling things, always get it checked. And yeah, I mean, that's really all you can do with something that involves the human mind, because we do make mistakes.
So talk to me about how, when you're first thinking of engaging with a client, what is the common persona? Where are they at in their journey with things like admitting how much of their models are wrong? Where do you start that conversation, and how are you talking to them about the value that you can bring their business?
So quite often the clients that we end up working with are people who are either starting a new venture or trying to raise money or trying to change tag. And so they'll want something that is new to start them again so that they can go and, something that is PE friendly so that they can actually go and raise a lot of money as opposed to using what they've been using before. So quite often, all of my inquiries actually are inbound. I don't do any outreach to people because they know when they need the help. I've tried doing cold outreach, but then they don't realize that they don't have an issue because they don't realize they have an issue. Whereas as soon as they get to one of these crux points, that's when they realize they have an issue and they come to me and ask us to build something or to take over in analyzing for them. But my whole ethos is to build something that they can use themselves.
So how does that process work? How do you both do the teaching part of that at the same time as producing what they're then going to take and use for fundraising themselves, for example?
What do you mean? Teaching people to become analysts and build models? Or
Yeah. I mean, so part of what I'm asking here is part of what you do is a product and part of it's a service. How does that work?
They're reasonably separate. I think that sometimes people come to us to build models because they already have an analyst, but they don't want them to spend the time building something, or they don't have the ability and the skills to build something, but they can use it. And so that's where I'm purely just building something so then they can take it on themselves. When it comes to the training, so there are two bits. There's a transition of handing over a model to someone, which comes with training, and I like to record lots and lots of videos to show how all of the tabs work and how everything works.
We love Loom videos.
Yeah, so they can watch it anytime they want without having to sort of be like, oh no, Lucy's on holiday and I need this question answered. They should be able to find that in the videos. And then the training that I do is very separate to that because it's much more taking people from zero to me.
And which parts of that do you enjoy most? I'm still hearing how much you love building models yourself.
Yeah, I really like building models. I really don't like running scenarios and putting acquisitions into models because it's very samey. Whereas building something gives you the ability to try and, as I say, improve on what I did last time I built a model. I can make it better this time. And all of the models that we build are pretty much from scratch because they're all built taking what a client already has so that it looks familiar to them, but starting completely again. So the inputs and the outputs should look fairly similar to the client because it's based on what they already use, but all the calculations in the middle are completely different. And that's what I really like, trying to get that to work and get it to work more efficiently and have more functionality than they had before, or whatever it is, to make it better than it was before, and to be able to say, because they'll be normally raising money or they'll be using it for a different asset class, and so they want something that has more flexibility and abilities to it.
It sounds like there are some obvious success metrics there, but is, having more fun in working with a model also part of it? It sounds like you want people to also fall a little bit in love with the thing that they're doing in a new way.
Yeah, I want them to not be terrified when they open a spreadsheet. Because when I open client spreadsheets, sometimes I have a little mini heart attack and I'm thinking, oh my God, where is he? How do you even work this thing? Why is this so awful and terribly laid out? And so my thing is I want them to be able to open it and think, oh, this is really easy. I can just put a button, press this button or put this number in here, and that's going to give me the output that I want. So that's, my thing is try and get them to not be terrified when they open spreadsheets. Because so many people, as we talked about earlier, are not taught how to use Excel. And the older generations are even more terrified of it because it's been even longer since they haven't looked at Excel. So.
Yeah, it's true. I mean, the first time I got deep into a financial model, I was probably in my mid-20s. And there's no good excuse for that. I am wondering where you think the technology is headed. So will Excel in some version of its current life still be the go-to for analysts 10 years from now?
It's so hard to say because I think the beauty of Excel is that you can see everything. Nothing's hidden from you in a way that all of these lockbox valuation tools are. And that's why we all fall back on it every single time, because it means that we can add in that functionality and we can check it because we can see everything in there. I think Excel will probably be around. It's just a question of how people use it. But then I was having a conversation with someone earlier about whether AI can get rid of the junior analyst role, and potentially it can. But then how are people going to learn how to be senior analysts if they haven't had a chance to be a junior analyst? So in a way, there still will be analysts around doing work, but they'll just be doing things differently, like I said earlier, with sort of using it to make you better at Excel, but not necessarily replacing you. I think you'll know from your world that people focusing a lot on data with AI, but not necessarily on financial modelling quite yet, probably because it's much harder.
Yeah, absolutely. It's something that people are really only tackling now because they're able to not only leverage new technical innovations like tabular RAG to work with Excel in a different way, but also realizing that LLMs are not solutions in and of themselves, right? So the fundamental constraints of LLMs, they're not very good at math. In order to deal with something like a financial model, you have to actually just write a bunch of Python, as it turns out, and go back and forth between those things and maybe teach an LLM what a Waltz calculation is and have, that defined algorithmically, whereas there are other things for which the generative nature of LLMs are much more of an appropriate choice, let's say.
Yeah, and I think with one of the things for me is that I know that I am better than AI at financial modelling. And so I'm not really using it other than to improve random formulas and help me improve my macros sometimes. I'm not really using it. I'm not really teaching it anything. And that's the issue, is that as a sort of machine learning side of things, it's not being taught by people in that level. It's being potentially taught by people who are not very good. Exactly the issue that analysts and lots of people have currently now, is they're being taught by people who aren't very good at Excel how to be equally not very good at Excel.
Yeah, that's absolutely right. And that's why we focus quite a lot at Fifth Dimension on the right source of truth, right, to feed into a machine learning universe for your particular business. And that's everything from, whether you trust a particular government website about, current regulation, to whether you want to look at Federal Economic Reserve data or Bloomberg News, to all of the other things, right, that become inputs into an analysis, and obviously different types of financial models. And what is the internet? It's largely a consensus of idiots, not because there aren't people who are well-informed on the internet, but the way LLMs work is probabilistically, right? And so there's, a proliferation of content from people who are early in their careers or from outside the industry talking about the industry. And in a training perspective, from a base model, it's treated exactly the same way as, a professor from Stanford who has been working in machine learning for 30 years.
Yes, and that's why it's really important that you always ask for citations when you're using AI for any sort of thing like that, because some of the things it comes up with are quite interesting sometimes.
Yes, absolutely. And I hope we're moving towards a world in which, AI could be a helpful partner in teaching people to do better financial modeling from more junior stages. If you, for example, you're a business that currently works with us, and everyone from junior analyst to the chief investment officer uses our product, we have an interesting knowledge base, right, of how those different folks work, for better and for worse. And we could try and take, a phased approach and say, cool, for your stage, I'm not going to give you these answers. What I can do for you is QA the model that you have given me, and then go through reasoning as to why I think an alternative would be better or worse, for example.
That would be quite handy, because I think that's the issue that comes along with people trying to learn, or AI trying to replace those junior jobs, is that you need to do the junior job to learn enough to be able to do the senior job later. So having something like that, a little teaching version, would be very useful.
Yeah, I think that's definitely where things are headed. Obviously, it's going to take us all a few years. As you say, it's about having the right training data, and for good and for bad reasons, people are quite precious about what goes into their models because they view a lot of that as their special sauce. It's one of the reasons why we build a separate instance of our product for each customer that we work with. So it's only, in most cases, it's a sandbox version. The learning benefits, if you're Blackstone, are only going to Blackstone, which I think makes sense. But in a way, right, what I'm talking about there is we're still existing in data silos, whereas someone like you is in a unique position to look across people's models and be like, wait a second, you guys are all doing totally different stuff.
Yes, and that's what, it's a surprising thing, I think, every time I open one of my clients' existing spreadsheets and I think, this is interesting. I don't often think, I should take this concept and use it in a future model. I often mostly think, this is a terrible idea. We should start again. So,
when you think about, some of these really high stakes decisions that get made off the basis of some of the models that you might yourself have created or people are working with, like, how many really bad investment decisions come from bad modeling versus any other human reason?
I think it's completely impossible to say, because I know that from the day one model that you do when you make that decision to buy an asset versus what it looks like when you sell it, your returns are not going to be the same. Like, I think in one instance in my career has it been the same, and that was purely coincidence, because there are so many other factors. And really all you're doing with your model at that point in time is seeing, am I making the best decision given all of the knowledge that I have at this point in time? But then COVID happens and Brexit happens, and you have no idea that those are going to happen and what the impact of those things are. So you can't make those sort of assumptions from day one. So you're using it to make the best decision at that point in time and to manage your investors and your own expectations at that point in time. And that's the best that you can do.
Yeah, I was wondering about COVID and thinking about if you're modeling today for, let's say, certain types of office spaces or hybrid office spaces. The flight to quality has been talked about quite a lot. Are the ways in which you would model certain commercial assets today fundamentally different, having lived through that period, or do we still just not know?
It's not really. It's the answer. It's all very similar. I think that obviously the sort of the use of it, the use of the building itself has changed, and so that might change how you're building a model, because it might not just be assuming that you've got one tenant in there. You might be doing more of a hybrid model where you have a sort of WeWork style multi-let building, but that's really the only difference, because you have no idea. Everyone assumes everyone's going back to work and back in the office all the time, and so the office market is going to be normal again, and all of the rents are going to be normal, and that's all you can do. You can't assume that there's going to be another COVID next week that knocks everyone out. So,
yeah. Do you think that people are trying to innovate against, let's say, reducing vacancy, thinking about these more hybrid models? You might have higher turnover. There's more uncertainty, I guess, at least in the assumptions, I think, that a lot of people are making about the way commercial real estate works these days. And I suppose from a naive perspective, I see a lot of people's models, but I'm wondering how many of those assumptions are really being baked in or played out at the modeling level.
Yeah, there's definitely obviously things around assumptions, like to encourage more people into the office, people potentially spending more money on when they're doing refurbishments and stuff like that. But that's all you really can do, and it just comes down to, so for me, the modelling itself has not changed, but it's potentially the assumptions that go into it that do change. But and this is one of the things I do say to a lot of my clients, I can't be an expert in your particular office in Bristol. You need to speak to the market about that. So I don't really see a huge amount of that side of the industry. I'm dealing with actually building the computer that does it, building the model, and then leaving them to find the assumptions and speak to the agents in the market to find out what's happening. But the underlying way the model works is the same.
Makes a lot of sense. How do you think, let's say, tech adoption is going to change the real estate industry over the next 5, 10, 15 years. So a lot of people would say not much has changed in the prior 15. To your point, the models are basically the same. It's the world that has changed.
Yes, the property market, people who work in the property industry don't like change too quickly. So I imagine not a huge amount of change will happen in the next 15 years. But as I said, like on the modelling side, from an investment perspective, no, it hasn't changed. It obviously is changing for valuations a bit. But yeah, it's just a question of all of those people trying to learn and adopt. And I know that for those of us who work in newer businesses, we are bringing on AI and adopting it and trying to make the most of it. But there will be lots of companies out there. And actually, it was interesting. I was listening to a podcast, I think, earlier, specifically about this, about the fact that if you're in a bigger company, are you actively being discouraged to not use AI in case you learn too much or sort of get yourself out of a job by doing that? And so it's going to be interesting to see whether things change. And I remember sitting at a conference many years ago and people being absolutely terribly worried that AI was going to take their jobs imminently. And it was probably about 10 years ago. Yes. And it obviously hasn't happened yet. And I know lots of things and it gets faster, the change and everything like that, but there is still a big human element in real estate.
Absolutely. And I like to say that decision makers never go out of fashion. And if, the next stage of AI adoption, however long it takes to play out, just means that people have access to better and more reliable insights with which they make decisions, right? Awesome. People have investment committees because people vote different ways based on the same underlying sets of data, right? Because your worldview and your experience supersede whatever those data sets are at your business, at your prior businesses, right? And every day-to-day interaction that you have and all the ways in which we build bias into our own mental models. So yeah, I think property is going to change. I don't know how long it's going to take. And there are businesses we work with that have a mandate for, how much they need to accomplish with AI, how many different types of AI they need to try in 2025, which is an interesting way of approaching it. And there are businesses that are interested in working with us where from the executive level down, they've been told they cannot use any AI ever. It's usually under the auspice of some sort of data security concern. But in reality, I think it's a lot more complex in its relationship to where people view their primary revenue streams, their focus, their IP. How is it going to, how would we have to think about reworking our org structure if we really did any of this stuff and took it seriously? And some businesses, rightly or wrongly, would just prefer to see how the next 5 years play out before they make that decision.
Yeah. And all of those jobs, they're all going to, like with AI and tech, they can become faster, but ultimately conversations and decisions need to be made by people.
But yeah, I think I like the people element of real estate. It's something that's always attracted me to it. And the fact, real assets, the built world touches everyone. That's why I like working in and around it so much, is that it is so human. And in my ideal world, whatever AI agents Kate has running around in the background doing 60% of her work, like that just means I can spend that 60% having more interesting strategic conversations with my team, going into the field and figuring out what my clients are doing in a more, increasingly more meaningful way. So I hope it means that we just do more people things rather than fewer people things.
We'll see.
We'll see. Is there anything that you would like to leave our listeners with in terms of your thoughts on the future or talking a little bit more about where you see yourself and your business headed?
Well, yeah, so my focus going forward is really on training people and helping, it's very cheesy, more people excel in property.
Love it.
So yeah, that's where my focus is going to be. So I'm launching, I'm not sure what date this is going out at, but launching a new training platform in the middle of May, which people should definitely come and check out.
Fantastic. And I know you have a digital summit coming up as well.
Yes, you are speaking on our digital summit, virtual summit, which will be fun. I'm really excited about that. I'm really looking forward to it. We had a really interesting chat with all the speakers and lots of fun topics that hopefully we'll be covering, just like this conversation.
Excellent. Well, thank you so much for joining us, Lucy. It's been a pleasure, and I'm sure I'll be sending some people your way.
Hopefully, and same back at you. Really lovely to be here. Thank you very much for having me.